It's 10 p.m. and as usual, we are here to give you all the personal finance news that impacts your wallet only on Money Time at Money9. This is me Ajay. Let's kick things off with inflation. According to the government, CPI inflation for the month of June is 7.01%. This means retail inflation has fallen for the second straight month, but inflation has again remained above RBI's upper band of tolerance level. Apparently, retail inflation has remained higher for the month of June because of high vegetable and footwear prices. Although, egg inflation has shown some respite as it falls to 5.48% in negative. Rural inflation has again increased to 7.09%, but urban inflation showed consolidation on a sequential basis. Up next, it's all about loans, and loans. Home loan, car loan and personal loans of Union Bank of India and Bank of Baroda are set to get costlier. The latter has increased the MCLR by 10 to 15 basis points. After the latest hikes, the MCLR for different types of loans taken for a period of 1 year from the Bank of Baroda will be 7.65%. This means if you approach the public lender for home loan, then you will have to pay 0.15% higher interest. Lenders have been raising interest rates ever since the RBI had hiked repo rate earlier in the month of May. The home loan of Union Bank of India has also risen by 0.1% as it has also raised its MCLR by an equivalent margin. After the latest hikes, the public lender's 1-year MCLR stands at 7.55%. Up next, more news on banks. ICICI Bank, the country's second largest private sector lender, has again raised the interest rates on its fixed deposits. After the latest rate hike, the bank will be giving interest rates in the range of 3.1% to 5.75% on fixed deposits of different tenures. The new rates are applicable for FDs between 2 to 5 crore rupees. The shortest tenure is of 7 days to 14 days, while the longest tenure of FD is for 5 years, 1 day to 10 years period, on which depositors will get the highest interest rate of 5.75%. Depositors can also avail of this interest rate on FDs of 15 months to less than 18 months tenure. Senior citizens will get same FD rates as the above applicable rates. The new rates are applicable only on those FDs that will be open for a minimum 2 crore rupees and a maximum of 5 crore rupees. Now, if you regularly visit supermarkets to buy goods that you need for your daily life, then you must have noticed that such goods have become really expensive in the last 1 year. But the manufacturers of these items have said in an interview to a newspaper that they are not going to reduce the prices anytime soon. Neither are they looking to offer any discount or roll out any offers in the near future. These manufacturers had increased prices because the cost of raw materials with which they manufacture such products had almost doubled during this period. Speculations were rife that since prices of those raw materials had begun to soften of late, and it was expected from the manufacturers to slash prices that would give some respite to the common man. But thanks to companies like HUL, Dabur, Godrej, etc., people are not going to get any relief from rising inflation, at least for the time being. Up next, brokerage firm Jefferies has downgraded 6 IT stocks because of recession fears. The brokerage has downgraded HCL Tech and given it a hold rating, while it has downgraded Wipro and Coforge to underperform. Infosys is brokerage's top pick with a price target of 1,700 rupees, whereas it is apprehensive about TCS rich valuation. It has maintained hold on the counter with a revised price target of 3,070 rupees. On LTI, the brokerage has said that the IT stock was better placed as it drew mixed revenue from different sectors, but it was wary of its merger with Mindtree. Overall, the brokerage has said that revenue growth of India's IT firms is expected to slow down with resultant fall in expected earnings, EPS and PE ratio. Now, of late, retail investors have been losing interest in the stock market. They had opened the least number of D-Mart accounts in June 2022 in the last 16 months. Experts say that the recent underperformance of the benchmark indices is the main reason why retail investors are losing interest in equities. Apparently, other reasons are tightening of margin norms by capital market regulators SEBI and reopening of the economy. Ever since the reopening, people are not spending as much free time as they used to spend during the lockdown periods in 2020 and 2021. According to experts, retail investors might not return back to the markets in the near term. Up next, if you invest in mutual funds, then you must be knowing what are equity mutual funds and what are debt mutual funds. Although in India, people invest mainly in equity funds, But if we look at the latest data of AMFI, then we see that in June, retail investors like you and me have invested heavily in equity mutual funds even when the market has been volatile. This is despite the fact that FIIs have been constantly selling in the last 1 year. When we gauge figures of how much retail investors invested in debt funds, then you will be surprised to know that retail investors have rather chosen to redeem units of debt funds in June. In fact, investors have withdrawn money from debt funds in June almost 3 times more money than in May. Among debt funds, investors are only investing in 10-year gilt funds and the long duration funds. Well, it's time that debt funds become popular among retail investors in India. And talking about stocks, if you're a shareholder of Avenue Supermarts that owns retail chain D-Mart, then this news is for you. Avenue Supermarts had come up with impressive June quarter results. As a result, the stock surged nearly 4% on Monday. If you're also looking to invest in Avenue Supermarts, looking at the fresh rally in the stock, then you must first check out what renowned brokerages are saying about the stock. Well, in spite of posting better than expected results, brokerages have turned cautious on the stock. Most of the brokerages like Jefferies, ICICI Securities, HDFC Securities and Kotak Institutional Equities have downgraded the script, citing near-term inflationary risks. So, before you look to add on or make any fresh entry into the stock, do check out views of various brokerages so that you don't end up investing in the wrong stock. Next up is the good news for our viewers abroad. To address the continuous fall in the value of the rupee, the RBI had taken measures to stop outflow of foreign currency from the country. 2 of the biggest banks in India, the SBI and the HDFC Bank, have increased deposit rates on NRI accounts. After the latest hike, NRIs can now get an annual interest of 3.35% if they open the FCNR deposit with a private sector lender for 1-year tenure. While with the SBI, they will get interest rate of 2.85% for FCNR of the same tenure. And we wind up today's Money Time with what happened in the world of cryptos. First, let's see which cryptos plummeted the most. Cryptos such as Aave, Wax, Compound, Livepeer, Band Protocol, Cosmos, Uniswap, Koti, The Graph and Sushi fell in the range of more than 6% to 11% in the last 24 hours. Now, let's look at the cryptos which blessed investors with windfall gains. Cryptos like Quant, Loopring, Polygon, USD Coin, Binance USD, Tether, STP Network, Mina and the Sandbox surged in the range of less than 0.5% to almost 11%. That's all for today on Money Time at Money9. For more such news like this, keep watching Money9 English's YouTube channel. Do like and follow us on Twitter, Instagram and on Facebook.